Well, it's been a mad week on the markets as investors attempt the impossible and try to anticipate the next bizarre development in Euroland. With the latest news, it's over to Jane Edwards. Jane.
Thanks, Alan. With the Greek confidence vote looming, Wall Street traders had a jittery session on Friday, with the Dow falling sharply at the opening before recovering through the afternoon to finish 0.5% lower. The S&P 500 and the Nasdaq were also down as investors waited for direction from Europe over the weekend. It came in the early hours of Saturday morning, with the Greek Prime Minister George Papandreou surviving a parliamentary confidence motion in a move seen as an endorsement of the nation's tough bailout package. It caused sighs of relief within the EU after a week in which the future of the Eurozone was thrown into further doubt by Greece's political turmoil.
The optimism is back after this rumble in the jungle of Mr. Papandreou. So we are focused on the implementation of the decisions of Brussels, and if we see them, then we are quite confident that we will see within the next couple of weeks a rising stock exchange.
Greece will now have a coalition government that's expected to push the bailout package through Parliament. Elsewhere, the G20 summit wrapped up with an agreement for the IMF to closely monitor Italy's financial reforms, which should also calm market nerves. And there was some reasonably good news in the US, with unemployment falling slightly as economic growth continues to plod along. The effect of the Greek situation can be seen in the week's share market movements. All markets were in the red, with European stocks falling the most. Australia's market lost 2% despite climbing strongly on Friday, as Tom Elliott explains.
Well, as you just heard, the Australian share market had another volatile week. Probably no surprise when you consider the macro indicators out there. Firstly, the Reserve Bank on cup date cut interest rates from 4.75 to 4.5%. 2 days later, it cut its forecast for economic growth in the Australian economy from 4 down to 3.25. Got to tell you, I reckon even that 3.25% estimate is still too optimistic. And of course, Greece continues to do the hokey pokey with the European Union. One day it's in, next day it's out. The big four banks were all sold off during the week. Lower interest rates can mean profit compression for all of them, and as we know, 3 out of 4 did pass on the rate cut in full. Woolworths held an investor presentation day. It was pretty well received by analysts. The stock was up during the week. There are some concerns about the company's potentially expensive expansion into hardware with its Masters chain. However, it said it will deal with its underperforming divisions in Big W and Dick Smith. Quite possible that the Dick Smith chain will be headed for a sale. Qantas shares were in the wars during the week as the company negotiates with both the federal government and the union movement. However, investors liked what CEO Alan Joyce had to say. Qantas up 5%, although of course Virgin Blue shares, its biggest competitors, were also up 7% during the week. And iron ore prices, they headed south, and this would be normally a cause for concern. What is weird, however, is that our two biggest steel-making stocks, One Steel and BlueScope, they were weaker. And yet our big iron ore producers, well, Rio was steady, but Atlas and Fortescue were both up. Very hard to work out exactly what's going on there. Winner of the week is Trans-Pacific Industries, up 21% after restructuring its debt and embarking on a capital raising. Loser of the week, however, is One Steel, down 24% after issuing a profit warning on Wednesday.